Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the crime data to June, we update what is happening to the risk premium, take a look at the implications of that dramatic US rate cut, and we'll wrap up with what the other media are reporting. Violent crime increased by 4.4% in the year to June, while offences against property rose by 8.4%, police statistics for the first half of 2007 reveal. According to the political debates 10 years ago, it was high unemployment and social deprivation that were the root causes of our high crime numbers. But unemployment is now at record lows and income transfers are now at record highs, and yet reported crime has risen far above those levels 10 years ago to be their worst ever. However, it is not all bad. Reported dishonesty crime, including fraud, continues to fall. Maybe we have rising crime because at the same time we have downgraded the social disapproval for committing it. Now it seems it's always someone else's fault. And the justice system renders verdicts that support the idea that the perpetrators are not somehow responsible for their own actions. We may have more crime, we certainly have less responsibility. The good news is that so long as the government spends more money on more studies, criminal activity is sure to reduce in the future, right? The underlying causes of the great international credit crunch are not going away. In fact, we may now be entering a period where the full implications of the losses suffered by the financial industry will start to be reported. And this will accentuate the risks in these credit markets. Many of the early reporters of losses have come from those who have played straight by the rules. But some of the future reporting will be by those who have worked feverishly behind the scenes to mask and mitigate their bruises. For some, there will be no place to hide as the September reporting season kicks into full gear. Today, giant Swiss bank UBS has announced huge write-offs. Citibank as well. More will follow. Risk continues to be priced higher in markets around the world. For us in New Zealand, we won't be able to avoid the implications. The spread between US and New Zealand government paper continues to widen, and the spread between sovereign and commercial paper is growing as well. For New Zealand corporates, the cost of credit is rising. It will flow on to New Zealand households as well. The recent 0.5% rate cut action by the US Fed has been widely welcomed and has helped propel stock exchange prices sharply higher the world over. Equity markets see future growth and prosperity. At the same time, the US currency has fallen in value equally sharply. Other markets see risk and decline. So what is happening? The Fed has been trying to stave off an immediate credit crisis, and it may have been successful in that. But there will be other longer-term implications and longer-term consequences. Dr. Neville Bennett has reviewed these differing forces, and some of them will have important implications for New Zealand. The most directly related will be a surge in commodity prices, and that will come with a rising exchange rate. Australia will benefit the most, but we will be generally happy to go along for the ride. There is also evidence the US currency may undergo a strong shift in attraction for those who use it as a store of value. It could be losing that function. That will have dramatic implications for the way commodities are priced and how international contracts are written. The full analysis is available from the links on our drop-down menu under the News tab. And finally today, a quick wrap-up of some other recent news. JP Morgan Chase Bank has been registered as a bank in New Zealand. The bank will operate as a branch and intends to operate entirely in wholesale markets. It will not be providing retail banking services. Changes in the way investments are taxed are seen as paving the way for a renaissance in the managed funds industry. The new rules, which include the establishment of portfolio investment entities, PIEs, were introduced by the government as a long overdue reform. Not everyone is happy, however, about yet another distortion to the income tax system. Swiss bank UBS is expected to warn that it has written off billions of dollars in fixed income assets, making it the biggest casualty so far of the turmoil in world credit markets, both the Wall Street Journal and the British Financial Times are reporting. You can get more news and stay up with Newsmaker views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.